Welcome to Build with Bitcoin. In today's episode, we speak with Stephen Cole, startup investor and co-founder of Orqestra. We get into various aspects of early stage technology, the Bitcoin protocol, and the details of what they're working on at Orqestra to make it easy for cash flowing businesses to allocate to Bitcoin. We hope you enjoy, and as a reminder, this podcast is for educational purposes only. Welcome to Build with Bitcoin. I'm co-host Israel Munoz, joined with co-host Lynn Bairstow, and today we're very happy to welcome Stephen Cole. Stephen, welcome.
Hey, thank you, Israel and Lynn. It's a pleasure.
We're particularly excited for today's conversation. You're a startup investor and now a founder in the Bitcoin space, Orqestra, which we'll get into what you're doing, facilitating treasury buys for companies. Before we get into the Bitcoin conversation, we'd love to get started with learning a little more about who you are, Stephen, and then maybe your background before Bitcoin. What got you into this journey?
Yeah, for sure. So I'm 38, so I was around for the kind of early days of the internet, but I was a youngster back then, but definitely remember being pulled toward internet technology just from its earliest days. Even when I was elementary school age, just very attracted to the computer, felt like technology was so exciting, majored in computer science in school, and did everything I could to kind of get a foot in the door in Silicon Valley. So right out of college, I spent 10 years. I moved from Missouri, which is where I was born and raised, and went to school, to the San Francisco Bay Area, and started my career at eBay and worked there on kind of back-end systems and engineering for about 4 years. And then I got really intrigued with this idea of a startup that I kept hearing so much about. And there was a leader who I really admired and kind of mentor of mine who left eBay to join a cloud computing startup in 2012. I eventually nagged him and that crew enough to let me join and be a part of it. And that was my first startup journey as an employee. And then I joined an AI hardware company after that one in 2015. And I fell in love with startups, even from that first experience. The notion of a small group of people with that sense of shared mission, shared belief in what they're doing, zero bureaucracy, and you're just kind of giving it your all. And so I think I realized even back then that whatever capacity it is, whether it is employee, founder, advisor, investor, I want to be doing startup stuff with my waking hours. And so yeah, it was kind of up to my eyeballs in Silicon Valley web tech for about a decade, leading organizations. Both of those companies were acquired by larger enterprises. And so I kind of rode that roller coaster from, 10-person company to corporate behemoth a couple of times and experienced what that's like. And then in the background of some of it was Bitcoin. So I discovered Bitcoin in 2013 when I was working at that first cloud computing startup. The name of the company was Cloud Scaling. And there were a couple just brilliant engineers at the company who would not stop talking about this Bitcoin thing. And, it took a while for me to pay attention as it often does with this stuff. But once I did, I just became intrigued. I started attending Bitcoin meetups around the kind of San Jose and San Francisco area in 2014. And I think that really imbued me with a sense of appreciation for meetups and for community building too, because on my own, just trying to sift through things on the internet, especially in those days like 2013 and 14, there was not as much content, not people putting out fantastic podcasts like Build with Bitcoin. And so, sifting through everything was difficult, but being in the same room as people who are energized and knowledgeable about this stuff and just being able to have high bandwidth conversations with them really helped me appreciate some of what makes Bitcoin special more quickly than I think I would have otherwise. So that was, the focus of my career was kind of managing tech teams for about 10 years. And then around 2017, I left Intel. Intel acquired the AI startup Nirvana Systems that I was working with, and I spent about a year at Intel. I tried to get people within Intel excited about Bitcoin and, maybe build some Bitcoin mining chips. Couldn't quite get the right conversations going. And then I left Intel and just decided I wanted to be very intentional about growing in an investor capacity. And so I started cutting angel checks to early stage startups. And the initial focus of that was actually in the Bitcoin sector, because I had been active on Twitter and knew some entrepreneurs and had access to deal flow. And then my angel investing, it was the full-time focus effectively for a few years after that, and eventually broadened out to other sectors of, hard tech, deep tech, biotech, and everything in between.
Okay, so you kicked off your angel investing journey with Bitcoin already kind of integrated as a part of it. I thought you later incorporated the Bitcoin startup side. That's interesting. Well, before we get into a few topics, one question I do kind of want to pick your brain at, Stephen. So it sounds like you kind of dove right into the startup early internet days. Are there certain things that remind you of, let's just say the internet protocol that you now see similarities or maybe differences with just high level the Bitcoin protocol? How do you compare those two moments in time?
Very much so. I think that the big trends that I was really a part of for my professional career was, I suppose I was early to AI in joining Nirvana in 2015, and early-ish into cloud computing in 2012. And, those movements were fairly niche at the time. And then eventually they, sort of became just paradigm shifts and very mainstream. And there's a lot of excitement around both now, to the point that things like cloud computing have almost become the default. But I think that one comparison point for Bitcoin that I find myself coming back to most often is the internet itself. And granted, by the time that I was entering the workforce, the internet was already there and well established. Like, eBay existed, and it was not a startup when I joined it. But I think that especially the protocols that power the internet, the analogy between how those have developed and some of how Bitcoin has developed and is positioned, I really think works well. There are so many parallels there where, in the late 80s and early 90s, there was just uncertainty about what in the world this newfangled internet thing is. And there were different companies out there with different interests that were kind of trying to help define it and build around it. And there was even this phase of sort of competition of, well, like, what protocol is going to run the internet? And I remember back in school, so college for me was 2004 to 2008. And I was required in my curriculum to take courses on some of these network protocols that effectively don't exist anymore. I mean, they've kind of, maybe in a research lab context, but back then there was, this narrative that, the internet is going to be this collection of different protocols for different use cases, and maybe you'll have like TCP/IP for a certain type of network, and there were other names for, like, Apple had their own protocol, and a company called Novell had their own protocol called IPX. And I think everybody on some level kind of wanted their protocol to run the internet. And even very smart technologists back then kind of thought it was crazy that one protocol would run the internet, and I think that has so many parallels with the sort of like Bitcoin and cryptocurrency adoption trend, in that just brilliant people, I think, get so caught up in the details of the tech and kind of technology for the sake of technology that sometimes they end up being surprised by how things play out and just how practical some people are. And, TCP/IP is the protocol that runs the internet today, and it effectively ran away with the game, which was a surprise to even a lot of brilliant engineers and software folks. And so when I see, a lot of Silicon Valley excitement around all of these different cryptocurrency projects and blockchain for everything, and just blockchain being ubiquitous, I feel like there's a lot of parallels there with, people being so deep into the tech that sometimes you lose sight of, well, what's the real value add for the consumer, the end user, the system that you're building. And, maybe rather than this future of multiple tokens and all of this complexity, what if Bitcoin kind of ends up being the internet of money in the same way that TCP/IP kind of ran away with the game and became the protocol for information that powers the internet. And so that comparison point's just been fascinating in my view.
That kind of leads into exactly the question I wanted to ask you to drill down a little bit more. Those days in Silicon Valley, I was raising my first fund right around that same time, around 2012, 2013 in Silicon Valley. And it was just such an exciting time to be there that I would imagine it was hard. It would be easy to be distracted by like AI, the coming up of AI and IoT and different things like this. From your perspective, what was it about Bitcoin? And maybe it's what you just said that you kind of saw in it, the parallels to how the internet was being built. But there were a lot of tokens that were starting to emerge and the ICO craze around, shortly thereafter. But what was it about Bitcoin in particular that made you excited about that technology versus all the other technologies that were competing for attention in Silicon Valley in those days?
Yeah, that's been a really fun part of the journey to reflect on. I went through what is probably the typical journey into this, where you discover Bitcoin first, and then you hear, oh, there are all of these other projects, and what is this? Like, I was excited about Ethereum when it launched. Probably held 20 or 30 different cryptocurrencies once upon a time, and would have confidently said, oh yes, it's definitely going to be a multi-protocol future. And, if you want to support your favorite artist or celebrity, then the way you'll do that is by buying their coin. And I think that was just the kind of default technologist in me being excited about the tech, kind of jumping to that conclusion. And what I think really opened my eyes to Bitcoin's potential was Bitcoin through an economics lens. So starting in 2008, in addition to my tech day job, I just became enthusiastic about economics and Austrian economics. And so I was, going home from my software job and I was cracking open books on what makes good money and why humans have chosen to protect their wealth the ways that they have for thousands of years, in some cases. And that world was fascinating to me. And I think what I eventually realized is that Bitcoin just flies in the face of so much of the pattern matching that we have developed in Silicon Valley, either from the builder or often the investor lens, where the frameworks that you often apply are, who is the founder? Do you have confidence in their leadership? What is the roadmap? What if there are surprises? Can you change things quickly? Are you agile? Move fast, break things, just kind of the Facebook mantra, right? And so I think that there is this very natural tendency for investors to just look at Bitcoin through that lens. And when you do so, it doesn't work, right? Like, everything that makes Bitcoin special seems like a disadvantage. Like, every feature seems like a bug. There is no founder. You don't get to gauge. There is no brilliant founder behind it. There is no central authority that is handing down some roadmap from on high. And no, it can't move fast and break things. But if you are trying to be something like money for the world, then all of those things end up being powerful features. And that took me a while to appreciate. I think I bought my first Bitcoin in early 2013. And it probably wasn't until 2015 and 16 when some of that started to click for me with kind of the sound money economics and those attributes.
You hit on some very key points, Stephen, and I'll encourage anyone listening to, from my point of view, definitely do two things as you're getting into this space. One is read the Satoshi white paper, and two, learn a little about Austrian economics, like you just mentioned, Stephen. I mean, and you can do both those things, I mean, high level pretty quickly. But to your point, I mean, I think until you get that grasp of what this decentralized trust means within the economic frame, you're right. I mean, it's so easily to get distracted and caught up in all these other technologies because, face value, lots of them do sound, pretty exciting, and lots of them will capture the curiosity and mind of, any technologist or anyone just looking for opportunity. Funny enough, what you were mentioning as far as your curriculum in college, and your parallels to what we're seeing now, it reminded me, and I don't want to get too off topic, but it reminded me of a friend who recently went to do a MBA at, I won't name the university, but it's an Ivy League, and they sent me one of their course curriculums, and it was on smart contracts on Ethereum, for example, right? So, and to your point, there is still a lot of confusion around which technologies and protocols do what, but you do a great job, you kind of bringing us back to why Bitcoin is going to be the protocol that kind of just runs away with these network effects.
Yeah, thanks. And one quick, maybe a footnote I can quickly insert there is, if I had to distill everything down into just a very compressed why Bitcoin, I think anything special that happens in any of these other coins, if there ends up being substance and sticking power to some use case like smart contracts, we can eventually, with enough patience and clever engineering, build that in layers upon Bitcoin. But what I don't think we can ever do is go back after the fact and bolt on immutability, resistance to change at the base layer to those other projects, because they're just too socially centralized. And so then it just becomes a matter of, are you taking a long-term view? And if you are, then you wait for those things to be built upon the most sound foundation.
Yeah, and I was going to ask you, Stephen, to just clarify a little bit. I think the three of us understand what you're saying, but just to so if it kind of went by somebody when you talk about not having a founder is a benefit, and also moving slowly is a benefit. Can you express a little bit more, just go into a little bit more detail about why those things are beneficial when it comes to Bitcoin, and what you feel are the technological or ideological aspects of Bitcoin that make it superior to these other tokens?
Absolutely. I think that the piece about, decentralization and resistance to change is very interesting. So a lot of these other projects in cryptocurrency, Ethereum, Cardano, Ripple, name your project, they will often talk about how decentralized the project is. And when they talk about that, they will usually do so talking about technical decentralization. And so they'll cite, how many servers around the world run their software. And they'll point at that and they'll say, see, it's decentralized because it's on thousands of servers. And clearly if there's 10,000 servers around the world running this thing, it's decentralized. But what I think often gets glossed over is that no matter how many computers in the world are running some software, that doesn't matter so much if there is still a small group of influential people who can convince everyone running that software to change what they're doing. And so there's not only technical decentralization, there is social decentralization. And that distinction, I think, is lost so many times. And that's where Bitcoin really shines. The fact that we do not know the identity of Satoshi Nakamoto, the person or group of people that brought Bitcoin into existence, that is one of its most powerful features, in my view, because that makes it immune to so many different attack vectors or points at which pressure could be applied. There is no influential leader to bribe, kidnap, coerce, try to influence, to change the rules of the system. And if you are trying to be something like money for the world and a safe place for people to store value, then they need assurances. They need guarantees that the rules won't be changed out from under them. And so for something like money, that's absolutely critical. And I think even for the non-monetary use cases, even for things like, payment layers and smart contracts and any type of innovation that can be built on one of these platforms, there is just a lot of underappreciated value in predictability, in being able to know that the foundation you're building upon isn't going to get changed from underneath you. And that allows you as an app builder to just focus your energy on your customers and building your solution and not have to worry that you're going to get rug pulled, so to speak, by the protocol rules of the blockchain that you've chosen changing underneath you. And so I think Bitcoin offers the best in class in both of those. It's in my view the only blockchain out there that is socially decentralized enough and technically decentralized enough that we can have confidence that the core rules of the system won't change. One of those is, I'm sure most listeners know, is there can never be more than 21 million Bitcoin. And I think that if you look around, you cannot say that with confidence about any of the supply of these other cryptocurrencies. Even if the software is written with those limits today, there is always the chance that the founder, the CEO, the influential, the governance board can just kind of maneuver to change those in their interests or in the interests of their friends. And so Bitcoin, you know that there will only ever be 21 million Bitcoin, no matter what, 100 years from now, 1,000 years from now. And I think we're not even psychologically conditioned to sort of appreciate a statement like that because we're constantly lied to about scarcity too. We're always told it's the last of something, right? It's always the last Rolling Stones tour. It's always the last Star Wars sequel. It's like, and the more that they can convince us that's true, the more likely we are to spend our money and experience it. And so I think sometimes when people hear there can only be a certain number of Bitcoin, they kind of smile and nod, but they don't really deeply appreciate how powerful that is if that's actually the case.
It's a process. I think it takes time, at least personally. I mean, even though maybe if I heard someone like you explaining these attributes after, and even if it clicked in my mind, I think there's just a component of having to just kind of let time pass and truly test that out and work through it for you to truly grasp, I guess, the weight of everything you're speaking to. But absolutely, it's the superior form of money. Maybe just to round off the conversation before we get into Orqestra and everything you're doing there, Stephen, on the angel investing side, if we have any listeners that are interested in the angel investing or startup investing side of things, why is the Bitcoin protocol in particular to you an interesting technology?
Yeah. That piece gets really interesting. I've kind of adopted the view of Bitcoin as my personal savings technology, and being comfortable with that. I'm a realist, and that has taken a while for me, and it will take a while for anyone getting into this before that becomes true. But I kind of see Bitcoin as my personal savings, like my default store of value, the default place where my wealth goes. And then I see startups as my investing. I think a lot of people that would probably not compute for right now. It's like Bitcoin is an investment in their mind, and I think it's subjective, and so it's either one is valid, but that's the way that I view it. And I suspect that as the world becomes more familiar with this asset and more comfortable with this asset, that trend is only going to increase. And I think it's going to increase at every level, the retail individual level, the investor level, the business level, and at the nation state level. And I think that it's just the place where you can have the most certainty, particularly on the supply side, about what is or is not going to happen to your wealth. You know that your wealth will not be debased. It will not lose purchasing power due to inflation because someone else decided to increase the supply of money. If you held US dollars in a checking account for the multi-year period spanning 2020, when they chose to whim $1.5 trillion into existence, then you lost a lot of purchasing power. And maybe some of the money that they printed did not necessarily trickle through the system and find its way back to you in a way that's meaningful to you. And so in a lot of cases, it just resulted in value being kind of siphoned away from people who are trying to save. And so I'm incredibly excited about Bitcoin as a tool to just level the playing field and give people a safe default where they can go to sleep at night and wake up the next day and know that their purchasing power has been protected and ideally will increase in value over time rather than lose value. We have over 100 years of data that very clearly shows that dollars lose value over time. And we have about 15 years of data showing that Bitcoin has increased profoundly in value. And so, to the extent we have data so far, it's in Bitcoin's favor.
Build with Bitcoin is a proud affiliate partner of River. River is a Bitcoin-only financial services company, which I have personally been using for years, and I'm a big fan of the product and company.
Yeah, I'm also a big fan too. And I'm a big fan, especially when it comes to referring my friend group to start their Bitcoin journey or acquire some Bitcoin, because in addition to being a Bitcoin-only financial services company, River also has personalized customer service. So a person can actually talk to a human being if they need to when they're getting their account set up or in the process of it. I also love the fact that they have no fees on recurring purchases. And they also recently instituted a proof of reserve. So if you choose to hold your Bitcoin at River instead of self-custody, which many people do choose that, you can verify on their site that they have 100% reserved Bitcoin for every Bitcoin that you hold.
River also just launched a very interesting feature, which is a yield paid out in Bitcoin on your US dollar cash that you deposit at River. So you can hold that US dollar cash, earn that yield in Bitcoin in your account in River. And important to note, this is all through a regulated banking partner of theirs at a FDIC insured institution. So I think the River is a great partner for Bitcoin and cash deposited.
Yeah, because as much as we'd love to live on a Bitcoin standard, at least you and I, we need cash to operate in the world. And so this allows you to be able to earn a very competitive yield on your excess cash and have it paid in Bitcoin if you choose, and just continue to build your Bitcoin stash. So for anyone looking to start their journey, we invite you to join us at River by visiting partner.river.com/buildwithbitcoin. And Bitcoin, in the conversations that Israel and I have with some of our other guests who are investors, it's the hurdle rate. So you need to, as an investor, you need to kind of, and especially if you're running a fund, you need to exceed that rate of return for your investors. But the way you're thinking about it personally, Stephen, I mean, obviously for the time that you've been in it, you've seen very strong returns on Bitcoin. And so when you're looking at a company, which you call your investments, your startups, I mean, how are you thinking about this? Are you thinking that the companies that are kind of building out the infrastructure for Bitcoin to have more utility and adoption globally, that they'll far exceed the actual returns of Bitcoin itself? Or is it more of a philosophical concept that you have that you really want to be a part of it? Or how are you thinking about rates of return for Bitcoin companies versus Bitcoin itself?
I'm really glad you used the term hurdle rate, because I think that's important to touch on. I think Bitcoin will become the new default hurdle rate. And if someone wants your money for a business venture, for an investment, for a fund, for a company, they will have to increasingly demonstrate why they believe it can outperform Bitcoin. And that is a very high bar that, even building a Bitcoin company, like the idea of outperforming Bitcoin, the asset, is kind of terrifying sometimes. But I think there are certainly cases where companies, will be able to outperform Bitcoin, but it raises the bar for quality a lot. And I think that's really important, because there is so much capital sloshing around out there that is looking for a return. And if the hurdle rate is, something that is degrading in value over time, then the bar for investments gets rather low, and that results in capital misallocation. And so you get some ventures being funded that maybe are not outstanding businesses, or maybe it's an extremely, high risk play. And that just kind of has these ripple effects through society, where everyone gets pushed further and further down the risk spectrum, and so I think, as crazy as it probably sounds to say it today, I think eventually private equity funds, venture funds, funds of all shapes and sizes will have to denominate their returns against Bitcoin and dollars. And, similar to how the S&P 500 has kind of become a default, benchmark, and you have to explain why you believe someone should give you their money rather than just hold the S&P. I think Bitcoin will kind of take over as that in the long term. And so, not all of my investments have outperformed Bitcoin by any stretch of the imagination. Some have not. But I think that framework of having Bitcoin be the hurdle rate, it just results in a very powerfully good thing for society, where we, our willingness to invest into high risk things, and even things like get rich quick schemes, will lessen, because we actually believe that our money will just protect what we've earned. Anecdotally, I've had cases where, like, I'll be at a barber shop getting my hair cut, and the barber is, in recent years, he's like buzzing your hair with one hand and he's trading options on Robinhood with the other hand. And it's like, if you step back, it's kind of bizarre what we've arrived at. At one point in time, the money was good, and you could simply invest in being excellent at your craft and creating value in the world, and store what that value you create in the money. And you knew that the money was good, and you didn't have to endure all of this financial complexity of, you're looked at as an idiot if you don't have like a 60-40 portfolio and doing all of this, retirement account, mutual fund, financial gymnastics. All of that complexity has become normalized over the last 40, 50 years. And I think that Bitcoin can just be such a powerful accelerant for tech, for society, for the economy, by raising the bar for quality.
That's so interesting, because my first career was Wall Street, and we've only seen institutional adoption of Bitcoin since 2023, last year, with the ETFs and registered investment advisors being able to think about including them in portfolios that they recommend for their clients, especially on the retail level. But certainly now on the institutional level, I think retail still hasn't caught up. But when you start having hedge funds that have to compare their returns against Bitcoin, and they're charging management fees, and retail investors, and even the S&P 500, compared to Bitcoin return when you just hang on to it or hodl it, it's going to be really interesting to see how that shifts the mindset of investors to not having to take, so much time and energy of their own to outperform or to perform, beyond the inflation rate. Yeah.
Absolutely. That's a future I'm excited for.
Yeah.
Yeah. The societal implications, I think, are lost on many people. I mean, I think we all have some form of or story where perhaps, let's say, our grandparents were able to get ahead by just simply working hard, right? And now you fast forward and you kind of have to be close to the money printer, and that's now just unfortunately the incentive for being able to get ahead. And it doesn't click for many people. The cause of that is the kind of broken money system. Getting back to the angel investing side briefly, Stephen, and maybe this kind of segues us into Orqestra. But one last question on the angel investing side. How do you view this, this savings technology and superior form of money being used as a tool for our startups' growth and maybe, in an anti-dilution perspective in a way? I mean, kind of mentioned it earlier, Silicon Valley has grown used to this raise, grow. And that's just kind of the norm, right? And along the way, of course, founders are diluted. And now you suddenly have this savings technology where, if used wisely, perhaps protects you from some of these consequences of having to constantly raise and grow. From the VC or angel investing side, how do you view Bitcoin's role in that startup lifecycle?
Yeah, great question. I think sadly, a lot of venture capital, not all of it, but a lot of it has drifted into this pump and dump territory, or at least that, it's like quick markups on something on paper, and you try to find the hottest trend and, exit your position, like sell secondaries or IPO in some very compressed time frame. And I'm not, I'm a capitalist through and through. Like, I support people making money in free markets, and believe that's generally good. But I think that some of the incentives, perhaps, of the fiat money system do kind of lead people towards shorter term behavior and taking a shorter term view. And so my hope is that in a world with a foundation of sound money, which I believe Bitcoin can provide better than anything, that it will elongate people's view of what they're building and what they're doing. And it will kind of revitalize this sense of building something with lasting value, and something where you are not looking at trying to time the market and exit quickly, but you are just confident that it is an impactful venture that will, hopefully just create value and of course outperform the money. And so I hope it reorients investors and venture capitalists and gets us thinking on a longer timeline. There's a lot of venture capital funds, and are there too many? That's an interesting question. Perhaps if the hurdle rate is higher, there will not be as many. There will still be fantastic businesses that can deliver returns, can outperform the money, but I think it will make investors, LPs, GPs just more frugal, and they will look for things of lasting substance. And I think that that's just going to be so transformative for society. It's that notion of, like, back in the Renaissance in Europe, building cathedrals just brick by brick. In some cases, when you, as the builder, maybe you knew that you wouldn't be around to see the completion of it, but you had this vision of how wonderful it would be, and your children would enjoy it, and humanity would enjoy it. And I think we've, for whatever reason, maybe fiat money is to blame, we've kind of lost that. And so the idea of yes, investing into startups, investing into businesses, but doing so with just such a long-term view. A low time preference is kind of the econ terminology that folks might hear. And I think Bitcoin is such a powerful recalibrator that can really get people thinking in a mindset like that.
And bringing it back a little bit to Israel's question, that's from the VC investor side, but from the startup side, and you're working with very early startups, how do you advise them about starting to have a Bitcoin treasury as part of their strategy? Generally, startups need every penny, every dollar, to put into developing their product and hiring and things like this. But when you're thinking about Bitcoin actually being something that can grow along or side or even faster than the startup itself, and a treasury can help protect that foundation, how do you think about that, or how do you talk to your startups about Bitcoin treasury?
There is some irony in that, I believe Bitcoin will eventually be held by all businesses, but the volatility is very real. And that is just simply a function of how early we are in this. Bitcoin's, I don't even know the market cap today. What are like $1 trillion, $1.5 trillion asset class, something like that. Drop in the bucket compared to its potential. And so once it's a $100 trillion asset class, then that volatility will be greatly reduced. And so, I say that it's ironic because I spend a lot of my time in early stage startups, and I'm excited about Bitcoin. But actually, Bitcoin as a savings technology is probably the most, high risk for companies like that, because they are so sensitive to volatility. So if a company raises a pre-seed round of like $1 million or less, should they put some into Bitcoin? Maybe, if they're very comfortable with this space and, depending on the comfort level of their investors. But I think it's an easier yes for cash flow type of businesses where you are not necessarily, aggressively investing every penny into growth immediately. And if the value of Bitcoin and its volatility that we currently experience, like if it drops by 40%, if you have all of your pre-seed in a Bitcoin treasury and it goes down 40%, then you need to go back to the market and you need to do another, fundraise process and explain why to investors. And that would be a dark place. Like that's not good. So early stage startups are very runway sensitive, which means they're very volatility sensitive. And so, I usually advise them to just be very thoughtful. As much of a Bitcoiner through and through as I am, I don't think 100% all into Bitcoin for an early stage startup is necessarily the right answer. But the more that you grow, once you get to growth stage, then I think absolutely it becomes a lot more appropriate, and there's kind of an inflection point where it just strategically makes an increasing amount of sense.
I appreciate the candor there, Stephen, because it can be a bit of a double-edged sword if you only have 1 to 2 years of runway. It's a different story, right? But I think it depends a lot on the context and the comfort level of each individual and startup. So I'm assuming that at Orqestra, and maybe we can kind of transition to that piece of the conversation. I'm assuming that based on your explanation just now, at Orqestra, you're perhaps servicing the latter, the more cash flow type of business. But what is Orqestra, Stephen? I mean, what got you to the point where you decided to start Orqestra? Start a business yourself. You've previously been financing other startups. What was the motivation, and what are you doing at Orqestra?
Yeah, happy to dive into that. So the Orqestra story is interesting. Actually, my co-founder is Joao Almeida. He's previously co-founder and CTO of OpenNode, which is one of the prominent Lightning payments, sort of Bitcoin payment solution providers out there. And he started Orqestra, and I was one of the first investors in the company. And Joao and I had been friends for a while. We actually met for the first time about 6 years ago in 6 years ago by now, 2018 in Los Angeles, when he and I were both living there at the time. I went to a Bitcoin meetup, and that was when OpenNode was launching, announcing that they just raised funds from Draper, and we're going to be working on Lightning payments. And so, feel very blessed to have met Joao. He's one of the foremost experts in terms of payment infrastructure and Bitcoin. And we kept in touch over the years. When he told me about Orqestra, I just thought, this is the tool that I wish I had had for the last, 8 to 10 years, when I've been just enthusiastically stomping around San Francisco trying to tell my coffee shop and my sushi restaurant why they should think about this Bitcoin stuff. And it kind of happened organically. I invested, and we just found ourselves texting each other pretty much every day about the product and about go-to-market strategy. And my wife looked at me one day and goes, "Yeah, I don't think I've ever seen you this like day to day excited about one of the companies that you've invested in. What's going on here?" And Joao and I talked and realized, maybe this makes a lot of sense to partner up and do this thing together. And so I joined more recently as co-founder. And yes, we are focused on that type of cash flow style business. So small and medium businesses in the US. We are trying to purpose build something for them that really meets them where they're at and lets them get into Bitcoin, use it as a savings technology in the easiest possible way, the way that's least disruptive to their business. Because if there's one thing that's universally true about small business owners, they are working very hard, and they're incredibly busy just trying to do whatever their core business is. And so, as I reflect on the early days of my Bitcoin journey, I was in San Francisco. I chose my doctor in San Francisco just because he took Bitcoin, on Union Square. I ate at a sushi restaurant every day because they took Bitcoin. But in most cases, they were Bitcoin enthusiasts already, and they had to go through a lot of hassle to figure out what is a Bitcoin wallet and how do I set it up? And if someone wants to pay me in Bitcoin, how does that work? And then that sort of compounds if you have, if it's not just you, if you have staff and you're not in the office all the time, then they have to understand how to accept Bitcoin payments. And if you do something where, if you lose your seed words or you're not, storage is a concern, you might do something wrong and lose your savings. And that's not good for anyone. So when I reflected on it, I was enthusiastic about it, but in most cases, it was just too early. Even if they successfully navigate that world of wallets and software, which is wonderful, they get to this point where, maybe I'm like the one Bitcoin person who walks in their door once every, week or sometimes couple months. And so the ROI on adopting Bitcoin for payments is tricky because it's not often that Bitcoiners show up wanting to spend it because we're just so early. And so we tried to incorporate that into what we're building at Orqestra. So rather than having them do anything differently for their customers or with their point of sale, we've written software that just integrates with their existing payment systems. And so we already have integrations with a little over 10 payment processors and bookkeeping solutions. And so any businesses out there, they can sign up at Orqestra. They link up their account at that payment processor, and then they just tell us what percentage of the money they're making that they would like to have automatically converted into Bitcoin. And that way, it's nice because it's completely invisible to their customers. It's completely invisible to their staff. They don't have to train staff on this new Bitcoin stuff. They don't have to, ask their customers to do anything differently. Customers still just swipe their credit card. But then behind the scenes, that conversion is happening automatically. And it's being done in a percentage fashion, which might be better for them, especially if their revenues fluctuate. So there have been ways historically for them to open accounts and like business accounts to buy Bitcoin. But you have to either remember to go in every month or every so often and click a buy button, kind of do some math on how much you want to buy. Or you set up a recurring buy, which is great, but maybe your revenues fluctuate. Maybe it's seasonal. And so this way, it just kind of gives them a very precise way that they can dial the level of exposure they're getting to whatever they feel is appropriate for their business.
Kind of a just set it and forget it. And if I need to adjust, and I can, right, on my business's cash flows. I mean, that definitely removes a lot of the complexity or maybe overthinking about how I can retain a part of my business revenue in Bitcoin. And what what are you seeing so far, Stephen? I mean, low percentages that these businesses are. Where are we at there for a small business as far as the comfort level?
Yeah, it's low percentages. It's mostly between 1% and 10%. We have some enthusiastic Bitcoin companies that are, above 75%. But for the most part, it's under 10%. And one data point that is encouraging, and we'll see how long we can keep this streak alive, is we haven't seen anyone go the other direction yet. So usually we'll see them start at 1%, especially if they're brand new to Bitcoin. And then they'll, see it run for a while, and they'll see maybe some price appreciation, and they'll think, oh, this thing is doing what I thought it would do, and this is actually nice. And they see how it's impacting their bottom line, and then they'll dial it up some percentage points. We have not yet had anyone go the other direction. We've not had anyone go up and then dial it back down. And so we joke that we would love to keep that streak alive forever, but we'll see.
Stephen, geographically, is it U.S. only, or are you open?
Right now, just in the U.S. Some of these payment providers are global. In terms of us expanding, there would be work on our side in terms of the software that we've written, and we try to give business operators kind of a single pane of glass through our software to kind of view their holdings, their performance, and then be able to, if they need to downgrade to dollars, so to speak, trade some Bitcoin back to dollars, then that's quick, easy click of a button if they need to pay wages or expenses. But we try to just have that be a very simple view for them. And so there would be some work on our side to expand, but we're focused on the U.S. market right now and excited to bring it to small and medium businesses.
And I know you recently joined it, but can you talk to us about how long Orqestra has been available or out in the market, and how you're seeing the traction, and if there are any areas of types of businesses that are gravitating to it, other than with founders who are at least moderately familiar with Bitcoin?
Sure. We've been live for about 6 months. Part of that was a closed beta where we just had some, enthusiasts and friendlies aboard and wanted to make sure that the experience is awesome. And then we opened it more widely about 2 months ago, and it's generally available now. So anyone listening can go to our website, orqestra.io. We spell Orqestra with a Q, by the way, so ORQESTRA.io. You can sign up, go through the onboarding flow and be automatically converting part of your revenues into Bitcoin. Bitcoin meetups are a big distribution point for us. There's typically a Bitcoin meetup in every major metropolitan area. A lot of people who attend those are often business owners, and we find that the quickest, those where it's easiest to onboard and kind of the easiest decision to make is where there's not really a board or elaborate governance in place, and you have to get a lot of stakeholders to nod their heads and agree. It's often like a family-owned business, single-owner business, where someone is either already comfortable with Bitcoin or interested in exploring it, and they can just decide to register the business and be, live in a day or two.
Okay, I was going to ask you about the setup process, how quickly a business can get set up, but sounds like pretty quickly, based on your day or two mentioned there.
Yeah. You can sign up today, kind of go through the flow. There are some documentation, like there are compliance requirements, of course, and so we have to verify that the person signing up is who they say that they are, and that they own the business, just to make sure there's no, fraud or anything of that nature. But once you're done with that, it's done forever. You're on board the platform. And so that sign up process, can be done in under an hour or two, and then approved within, a couple days, and you can be off and running.
Very well. Yeah. I mean, I love what you guys are doing there, and I hope people as well appreciate this. I was thinking just now, in 2014, I believe it was, I visited Buenos Aires, and I remember learning about some of the capital controls that were present then. But I mean, I was almost thinking, I mean, if you're a business owner in a hyperinflating currency and you as a business can convert a percentage of your revenue to dollars, let's say, it almost sounds like a no-brainer when I put it that way, right? And a caveat to that as well being that due to the existence of capital controls in many places around the world, that's not even possible, right? And so you're able to just kind of plug into this open savings technology. It can be a very powerful tool for business owners. So great to see what you're building at Orqestra. Anything that facilitates plugging into this network in a user-friendly way, which I know is a lot of the hard work you guys have put into this, I think just goes a long ways, because it's still, I mean, we just have to admit we're getting there, but it's still not at the point where it's that easy to interact with. So,
I appreciate the kind words. And, I think it gets easier every day. The more entrepreneurs are out there building software and abstracting away the complexity of Bitcoin. It's like once upon a time, you had to be extremely tech savvy and use fancy command line jargon to send an email, in the late 80s. And now, anyone with a smartphone, my mom sends email all the time, and she's not particularly technically savvy. And I think it's just going to be very similar in this space. Every day, companies are building solutions that make it more and more accessible to different audiences, and we're excited to do our part to move the needle on that for business owners. And as much as I am and we are Bitcoin believers and enthusiasts, we don't want to be out there pushing Bitcoin on anyone where Bitcoin is not the right solution for them. Our mission is just simply to help business owners protect what they've worked incredibly hard to earn. And we just see Bitcoin as the best technology to make that possible. So that's what we're focused on.
If I were interested in Orqestra, Stephen, as far as just the general pricing or setup, it's a subscription pricing model. I can cancel anytime. Do I have to worry about custody? Can I, if I choose to, transfer to my own custody setup? Maybe if you can take us through a few of those.
For sure, yeah. So pricing, you're right. So it's fixed kind of SaaS pricing, software as a service. So $20 a month if you pay monthly. If you want to sign up for an annual subscription, $192 a year, which is effectively $16 a month. Free trial, 30 days. And if at any point it doesn't feel like the right solution for you, you can cancel anytime. We want to make it as easy as possible for these business owners who might be new to Bitcoin to get started. And so it is custodial by default. So when they, sign up and they start converting, then those Bitcoin are being held with a secure custodian, with BitGo, one of the most reputable custodians in the world. But we do not want to have any walled gardens. If they get more comfortable with Bitcoin and they start to understand the landscape of different storage solutions, maybe they want to store their Bitcoin themselves rather than trusting anyone else to keep them safe, then we make that easy. They can withdraw their Bitcoin to a different custodial platform. They can withdraw them to their own multi-signature wallet or whatever.
And from from the internal side of Orqestra, you're used to growing teams and growing startups. Are you looking for any talent right now? And if we have listeners out there that are interested in becoming involved in a Bitcoin startup, would Orqestra be a place that they can look?
Absolutely. We're going to be hiring this year. And so if anyone out there listening is excited about trying to enable an experience like this for business owners in the US and bring this asset to these types of businesses, then would love to chat. Full stack engineers, business development. My DMs are open on Twitter or X. And I read everything.
And Stephen, just generally speaking, I mean, you have such an interesting background of working with startups that have been acquired, being an angel investor, and now being more fully immersed in the Bitcoin space. What advice would you have to give to an entrepreneur that's looking at Bitcoin and saying, what do I need to do to get into this space, or what opportunities are there? Are there any particular areas of the infrastructure or user experience that you feel are ripe for disruption that need founders building in that area?
Such a great question. The opportunity space is so large, where there are already solutions out there for things like custody and things like payments, but it is still so early, as cliche as that is to say, that I think it is kind of like 1992 in the internet days. And so if you are curious about this trend, I would say just embrace that and connect with people on platforms like X, or Nostr is also interesting. It tends to be very Bitcoin centric, but Nostr is an exciting open communications protocol as well. Make accounts on those. Start sharing your thoughts. There is zero downside to doing so. It costs a little bit of your time, but the upside in terms of the people that you can connect with is just unbounded. And so, ask questions on platforms like that, engage with others who are asking questions, try to connect with people, look for, if you are specifically hunting for jobs in the Bitcoin space, there's bitcoinerjobs.com is an excellent website that lists technical and non-technical employment opportunities. And, I think people in this space tend to be so mission driven that they're very receptive and very generous with their time. And I've, been at every stage of my journey in the early days of it, and still today, I have been just humbled and grateful for how generous people are, who are a lot more knowledgeable and experienced with certain aspects of this than myself. And so I think that's special about this realm. So, and go to Bitcoin meetups too, by the way. Attend your local Bitcoin meetup, get in the same room as people who are excited about this. Going to meetups changed my life. I can connect the dots from so many things, whether it's investments that I was able to make, or, opportunities to be involved in organizations. And if you trace enough dots back, so many of them lead to just choosing to go and connect with people excited about Bitcoin in person.
Thank you for the advice there. And I mean, just so much to unpack from this conversation. Thank you for your time, Stephen. We really enjoyed the conversation.
I appreciate you having me. It's been a blast to chat, and appreciate all that you both do in bringing this kind of content to the space and making it accessible to people.
And we'll include this in our show notes. You mentioned that you're accessible via Twitter, probably your Nostr address too, but so you can share those with them, and we'll put them in the links. Do you speak at conferences, or are you easy to find somewhere other than online?
Yeah, home base for me is Phoenix, Arizona. I help co-organize the Bitcoin meetup there. So if you happen to be in the greater Phoenix area, come out to the AZ Bitcoin Network. We're on meetup.com, and then my DMs are open on X. Love connecting with people who are excited about this stuff. And, whether it's in the context of Orqestra or startup investment or just excitement about Bitcoin, love connecting with folks.
Thank you so much for your time. We really appreciate it.
Thank you both. Take care.
Thanks for listening to the Build with Bitcoin podcast. If you found benefit in what you heard in this episode, we'd truly appreciate it if you would like, share, or leave a comment on whichever platform you're listening, as this helps others find us, which is especially important for a new podcast. And as a reminder, our content is intended for educational and entertainment purposes only, and is not to be considered investment advice or a recommendation to invest in any company or asset mentioned in the podcast. Build with Bitcoin is a proud affiliate partner of River, a full-service, 100% reserve custody, Bitcoin-only financial services company. For your next Bitcoin purchase, use our exclusive link, partner.river.com/buildwithbitcoin. Thank you sincerely for being a part of the Build with Bitcoin community.